Thank you for logging into and opening this budget session. Today, I would like to introduce CA and Advocate Gagan Kumar. He basically he's actually the founder of Krishnomics Legal. And just a quick introduction about him. He is the president of Delhi chapter of India's Indian Lawyer Association, and he regularly speaks at various national and international forums on income tax and GST. He has also been awarded one of the tax controversy leaders by International Tax Review London, and that too consecutively for 6 years. He's also a leading corporate tax lawyer and has been awarded that designation by the International's Who's Who Legal in 2012. He's also authored books on GST and income tax, two of them being tax prosecutions under income tax and GST, and the other being search and seizure under Income Tax Act. Thank you, sir. Thank you so much for gracing this occasion. And let's talk about the budget. What is your take on it? Thank you so much.
Thanks, Sakshi, for the introduction and speaking some kind words. Um, so, this year's budget is more of an announcement. If you recall what happened on the Rajpath at the beating retreat, 1,000 drones were flown and they formed various shapes, including the shape of map of India. So that was an announcement that we have arrived. We no longer should look forward to the lightning show at Burj Khalifa or Chinese buildings. We have arrived and we are equipped to handle new economy. Now, to take this forward, when talking about new economy, I will first part of my discussion would be on the new regimes which have been introduced because this particular budget, particularly amendments relating to income tax, can be divided into two segments. One, which are new provisions, new amendments, and the second are more of clarificatory, where the laws have been amended to plug certain loopholes or to provide certain clarifications which were hitherto missing. So, taking the cue from what I stated earlier about the new age economy, the cryptocurrency has been talk of the town for a long period of time.
Yes.
And there was an ambiguity that what would be the taxation regime for such cryptocurrency. People were making enormous amount of profits, and the figures which are coming out in the public domain about the amount of investment which have been made by the Indians in cryptocurrency is phenomenal. There is a rough estimate that close to 45,000 crore have been invested by the Indians alone in cryptocurrency, and a large segment of that investor represents youngsters. So, while the world over governments are grappling with this issue that what is this instrument, how it would be treated, should it be called a currency in the first place or not? Because a currency is usually something which is issued by a sovereign country, and this is more of an instrument which is being traded, and how it is valuation is being derived at that's beyond my comprehension, my ability, so I'll not comment on that. But this budget, they have the finance minister has provided a clarity with regard to the cryptocurrency per se, and the phrase which has been used is virtual digital asset. Now, virtual digital asset has been used in a very wider sense, and you must also be aware of the new instruments like non-fungible tokens (NFT),
NFT.
which are being used for trading in digital art. And government has thought of any other possible scenario. So the way it has been worded is that it would mean any information, code, number, token, etc., etc. The Taxation regime has been kept very straightforward, so it will be not be a much of, you don't need a chartered accountant to pay tax as far as on the virtual digital asset is concerned. It's a flat 30%. Only the purchase cost will be deducted, and if you have incurred loss in a particular transaction and made profit in another transaction, that loss transaction shall be ignored, meaning thereby you will not be able to claim credit of the losses which you have incurred, but you certainly need to pay tax on the profit element. So that's one aspect of it. The second aspect is that there is a TDS provision has also been introduced in it. Now, what normal TDS provision we understand is that if I am making payment to you, I will withhold certain amount of tax and shall remit only the balance amount to you. Now, what would happen if I am buying cryptocurrency from you? If I am remitting you certain money, I am liable to withhold tax. So far, so good. But what if I am buying cryptocurrency using another cryptocurrency? Now, how would the withholding provisions would kick in this manner? So, the section 194S has been inserted, and which provides that in case the consideration is discharged fully or partly by way of another digital currency, then I will have to make sure that I will recover some money from you, which is on account of TDS. Now, this may also be possible, challenging but possible, as long as we both are within India. But if we carefully analyze the language adopted in section 194S, it provides another challenge. It says that any person making payment to a resident. Now, here comes the issue, because if we look at the definition of person, the definition of person is very wide, and it may include a non resident also. Now, literally reading, it may suggest that if an American is buying digital asset from me, which is very much possible in the case of a cryptocurrency, then while remitting payment to me, he need to comply with this section, which is a TDS section. Why would an American would come to comply with an Indian tax law he may not even be aware of? So I think that's one area which I think government need to come out with certain clarification, because I see this as part of certain ambiguity.
Okay, sir.
Moving on to the next new provision, which is updated return of income. So far, there is a provision that if there is an error or omission, you may revise your return within the certain time limit which is prescribed under the law. As you may be aware that lately government has enough tools when wherein they have a 360-degree profiling of every taxpayer. When I say 360-degree profiling, what it indicates is that they would know what all major expenses you have incurred, what all sources of income you have there. And assuming you have not disclosed anything which government is aware of, now therefore by way of a nudging, as we say, slap on the wrist, so they may say that, look, we already know that you have earned income which you have not disclosed in your return of income. So what do you have to do about that? Earlier there was no mechanism. So if such a situation arise, then I had no choice but to concede during the assessment proceeding. But that would also meant that I had to pay interest and penalty on that, and I was exposed to certain prosecution also. So now this is an amendment whereby government is showing some degree of faith in me and saying that, okay, we understand that you might have missed it, but we know about it. So might as well come forward and pay additional tax disclose that income, and go home happily. We will not do any penalty, prosecution, etc. But this is not free of cost. As they say, there are no free lunches. So there is also not free lunches. This section says that think of two scenarios. One where someone never filed a return and government now comes up with a list that, look man, I have this list, you have earned so much of income which you have not disclosed. Or there could be a scenario that I did file my return, but one or two sources of income I missed on filing and declaring it to the government authorities. So now in those cases, the provision says it's a very simple mathematics that you compute your tax the way you would normally compute, reduce your TDS, reduce your advance tax, reduce your self-assessment in case you have already filed a return earlier, what charge the interest which is otherwise leviable, and on the balance amount add another 25%. If you are doing it within 12 months of government telling you that this is the additional income. If you do it beyond 12 months, you have one more year, that is 2 years, but in that event, the additional tax would be increased to 50%. So, as I was saying, that there are no free lunches, so admitting that mistake is a costly affair. So, it is obviously advisable that at the time of filing of return, now that annual information is available on everybody's Traces account, so one should examine that and only then proceed for filing of the return.
So I have a question over here. I
Yeah.
actually wanted to understand what is the difference between the revised return that happens in 139.4 and this one that has been introduced, the updated return, as in the timelines. Basically, I wanted to understand what is the change in timelines here, because I think the revised return is available for at least one as the whole assessment year. So does the updated return one come after the time period for revised return, or does it come like during the same period?
So,
That is one clarity I think a lot of people would require.
yeah, yeah. So your question is very pertinent because you see, the period for revised return was reduced last year.
Yeah, exactly. Yes.
So this is only possible where you have no other remedy now left. You can't revise your return because that period has already lapsed.
Okay, so basically, once the return cannot be revised, that is exactly post which the updated return version will come handy basically.
Yes, but there are two other important aspects. You see, 139.4, you can reduce your income. You can
Yep.
add more, you can claim more expenses. You can claim
Mhm.
certain deductions which you missed out. But this is one way street. Here you can only add income, you cannot reduce income. So the
And you cannot.
updated,
I think you won't be able to take set off of losses also in
no, no,
case.
that is possible, but set off per se, that's another amendment that's not here.
No, no,
But
I'm just talking about this one particularly. Say, for example, I had losses. I had like filed losses in the previous year, in the previous return, and then there were a couple of additional incomes that were left out. Say, for example, I had interest income that was left out for like lakh or 1.5 lakhs. But then I had shown some sort of losses, like say PGBP losses. So, will I be able to set off when I file the updated return? This is what I'm asking basically
so
here.
no new deduction can come in or no new set off can come. What is
Yeah.
already there in the earlier return, that certainly you can claim, but you can't say that, okay, I discovered this new source of income and against this there was this new source of losses also there. So
Okay.
that is not possible. You can
Okay. Yeah. So
so that's the another major difference from the revised return. That in
yeah.
revised return you have the liberty to do whatever you have to do. But here it can move only in one direction.
Okay. 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 Thank you, sir.
Now, touching on the issue of set off of losses, a new section has been inserted, 79A. So what was happening was that whenever there was a search which was being conducted, and as a result, undisclosed income was being unearthed, now the assessors started coming up with an excuse that, okay, you have discovered this income, but we have brought forward losses, or we have certain losses also against it, so that should also be adjusted. And so far, this was being allowed. Now they have come with this specific provision, because you see, the idea is that if you were not coming out cleanly in the first place, then you cannot be allowed these kinds of benefits also. Had it been the case that if there were losses, why you should have disclosed it. If you did not disclose it and we have recovered it during the course of search or survey, then nothing doing, no set off will be permitted. So there is a specific prohibition under section 79A now. Now another important amendment is 158AB. Now you may be remembering that there is already a provision which says that if there are a question of law which is pending before the High Court or Supreme Court, then you can tell the tribunal or the lower authorities, and whatever would happen in that order will be the same principle will be followed in these subsequent judgments. But that would also mean that you will have to agitate that issue at least up to tribunal. So now, in order to reduce litigation, this new section has been brought in, and the way it would work is that, assuming I have obtained a relief on a specific ground from the tribunal, and department has gone into appeal against that order to High Court. So, in the next assessment year, the assessing officer may make an addition, but CIT appeal obviously will have to follow the higher superior authorities order, that is of the tribunal, and would grant me relief. The revenue cannot agitate that ground before tribunal until that order, the first order, is decided by the High Court or Supreme Court, as the case may be. And if it is decided against the assessee, then yes, the period of filing of appeal of 60 days will be reckoned from that date on which the order came of High Court or Supreme Court. If it came in the favor of assessee, then obviously the chapter gets closed. So that's a very beneficial provision as far as the tax litigation is concerned. So it's a major step to reduce or avoid the litigation wherever it is possible. Two more amendments on COVID related. Now, when the second wave hit, there were many cases where people were not able to pay for the medical expenses. So either their employer took care of those expenses, or their friends and family, and in some cases, uh, people made public appeal either on Facebook, Twitter, or some websites, and people generously help people, the patients or their family members, to get out of this uh, crisis. So there was not a clarity, because going by the reading of law, any such gift which is not from a blood relative was becoming taxable. So now they have provided for, although the notification came somewhere in the month of June 21 also, but now they have provided for in the statute that it will not be taxable up to 10 lakhs. Beyond 10 lakhs, there is, I think, still an ambiguity that the moment you cross 10 lakh, would the entire amount be taxable or only the excess amount would be taxable? I think that clarification is warranted from the government. Another issue now, henceforth, I'll be only taking the clarificatory amendments. So, as far as dispute relating to Section 14A was concerned, Section 14A says that if you have incurred any expenditure which is incurred for earning an income which was exempt, that expense shall not be allowed as deduction. So, there were issues where the assessees were arguing that although you are disallowing the expense, but during this year I have not earned a single penny, which is exempt. Though I have invested that money into an investment which will yield me tax free income, but since I have not received any tax free income, therefore it should not be disallowed. And this was being upheld by the tribunals and courts also. But now the revenue has again come up with this clarification, and they have said that nothing doing, whether you earned income or not, is immaterial. We will disallow any such expense which was meant to earn exempt income. So that closes the issue as far as Section 14A is concerned. Next amendment is in Section 37. Now, 37 we all know is the residual provision as far as the expense under the head profit and gains of business or profession is concerned. The law was very clear that if you have incurred any personal expense, capital expenditure, that will not be allowed as a deduction. Similarly, if you have incurred any expense which is a violation of law, that would also not be allowed as an expense. A view was being taken by various forums that it is only the violation of law in India and not elsewhere. And deductions were being claimed and being allowed for the expenses which were incurred to defend any case outside India. So now they have clarified that violation of law is violation of law regardless of which country you have done that. That's one. Second, compounding of offense when we were making payment, so those were also being claimed as a business expense. So uh, here, if I may meander a bit, when an offense is compounded, it is considered as an acquittal. So, legally speaking, if I have committed an offense for which I have gone ahead and paid compounding fees, I cannot be declared that I am convicted of an offense. Making me, this usually comes in a case where, because this is a major disqualification for directors, that if they are convicted of an offense, they cannot continue as director of a company. So that's the reason why most of the private limited companies, whenever there is a minor offense, they don't contest it, they really go for the compounding. So therefore, if you get an offense compounded, it is acquittal, and therefore the director can safely make a declaration that he has never been convicted of an offense. Now that may be an acquittal for the other purposes, legal purposes, but as far as Section 37 is concerned, they are still considering it as a violation of law. And therefore, if there is a compounding fee paid, that will be presumed, not presumed, in fact, now there is an expense provision, that would be regarded as an expense not allowable.
Okay.
Next is there was this ambiguity that when we pay tax, we pay interest and we pay cess also. There were certain judgments which suggested that tax does not include cess within the meaning of Section 40A, and therefore the deduction on account of cess should be allowed. Now, again, this clarification has come that no, we always intended to cover cess, and cess is also part of tax for the purpose of Section 40A. So, no deduction will be allowed for payment of cess. Now, moving on to the amendment in Section 43B. Section 43B, as you know, is a provision which allows deduction on payment basis, regardless of the accrual of the expense. The primary reason was that as far as the interest on term loan, etc., or financial from financial institution, banks, etc., was concerned, the same was also covered within the purview of 43B on the premise that unless you pay it, it will not be allowed as a deduction. Later on, the certain borrowers went for what we call CDRO, the corporate debt restructuring, wherein that outstanding interest was converted into loan
Loan.
and borrowing. So the court started taking a view that this is a constructive payment because it's no longer assumes the character of an interest, it's a principal only, and therefore it is a constructive payment. And they started permitting deduction under Section 43. So that was plugged a few years back. Then the new trend started that instead of loan and borrowing, debentures or bonds were being issued. Now, obviously, they were not specifically barred, so therefore, such issuance of debentures and bonds was considered a constructive payment. So now, through this amendment, they have plugged that also, that even that will not be considered as a payment, constructive payment under 43D.
That means no deduction will be allowed in that case. In case of any conversion or in any conversion of any sort, be it debenture or be it a loan, the deduction you cannot claim
Unless you actually pay. So
unless you.
if you have issued debenture in lieu of that interest, that is not permissible.
Sure. Okay.
As in permissible, but not deductible under 43B.
Okay. Okay.
Now, you would recall that Section 68, we have this celebrated judgment of lovely exports, wherein the issue arose that if I have certain share application or share capital appearing in my books of account, all I have to do is provide adequate documents to prove genuineness, identity, and creditworthiness of the person who has invested. If you doubt the source of that person, then Lovely Export Supreme Court said that issue a notice to that person. Why are you harassing the SSC? Then in 2012, they amended the law. They said, no, nothing doing. You will have to provide source of source. So, but that was applicable only qua share capital, share application money, or share premium. So that scope was limited. But if there was a loan appearing in my balance sheet, there again I was following the principle of Lovely Export. So now they have expanded that scope also. And they've said that in case of loan on borrowing also, here also you need to provide source of source. So that way the scope of section 68
Okay.
has been expanded. You talked about startups. Now,
Yeah.
startups are given this tax holiday, which was to expire in
2022.
2022. But last 2 years, we all know that what we went through. So this was more of a what I would say housekeeping amendment that the period has been extended to 2023.
So I
Similarly, yeah.
wanted to discuss the Section 80DD also, the medical, the provisions on the medical on disabled. So what are your thoughts on that one? Needed some clarity regarding that also.
So earlier the provision was that in case this amount would be deductible if the beneficiary gets it after the death of the insured insurance taker. Now they have amended that even during his lifetime, if he gets an annuity, that would be deducted.
Okay. Okay. So during the lifetime also now this opportunity for deduction is available now.
Yes. So moving on to the amendment on Section 94. I know this is getting more technical as I move forward because, but I'm sure our audience is are mostly qualified chartered accountants, so it's not difficult for them to understand. So
Yeah.
bonus stripping and dividend stripping was prohibited under Section 94.
Yes.
But as far as the similar scheme, as far as InvIT or REIT or alternative investment funds were concerned, they were not covered. So through this amendment, they have covered those also. So that's a simple expansion. Uh, Similarly, Section 115AB BAB. This also has more of a housekeeping amendment. For manufacturing company, the concessional rate of 15%. They were to commence production by 23, so they have also been given one more year. That is, by 24 they can commence the production to claim this concessional tax rate of 15%. Now, one important withdrawal is there, that there are many companies who have subsidiaries outside India. Now, at some point of time, government wanted these companies to encourage that you please repatriate profits from those foreign subsidiaries and bring money into India. How would they bring? They would obviously declare dividend of those foreign companies which would come to India. Under normal scenario, it would have been taxed at a normal rate because income of a Indian resident is tax. Uh, Global income is taxable at the normal rate. But a special dispensation was given by way of Section 115 BBD that if you receive dividend from a foreign company, it would be taxed at a concessional rate of 15%. Now that concession has been withdrawn now. So henceforth, if next year onward, if any dividend comes from the foreign subsidiary, then it would be taxable in India at normal rate.
So I think in that case it will be taxable at say 30%.
Whatever
Uh,
bracket that company
Whatever.
would be falling in.
Okay, okay. ठीक है.
Okay, moving on to the interesting aspects on reassessments.
Yes.
So, last time when the earlier regime of 148 was amended and the new provision of section 148A was brought in, there was this concern that the assessing officer may have been empowered to issue notices left, right, and center. A sort of assurance was given that no, it is not like that. The power of assessing officer is adequately supervised by the superior authority and they cannot issue notice at their whim and fancy. And that protection was in clause B of 148A. It said that an opportunity to be given to the assessee and the notice must be issued with the prior approval of specified authority. Now, this phrase, with the prior approval of specified authority, has been removed in this budget. The impact thereof would be that now the assessing officer need not ask his superior if he feels that the principles which are enunciated in 148A are being fulfilled, then he can issue a notice under 148A asking that why I should not commence reassessment proceeding in your case. That's one important aspect. The second important aspect which has happened is that in case the assessing officer wants to go beyond 3 years but up to 10 years, earlier the provision was that if you have a foreign asset, then and if it is more than 50 lakhs, then he can reopen your assessment for up to 10 years. Now there are two more things which have been added apart from the asset. If there is any expenditure which has been incurred for any event or occasion, so if someone had a very what should I say, बाजे गाजे के साथ किसी की शादी कराई थी उसने अपने घर में and he spent more than 50 lakhs as per the revenue, as per the department, then also they can go after that person and ask him to uh, show cause him that why your assessment should not be open. The other aspect which has been added is, which is more scary, that if there is any entry in the books of accounts, which they have not been able to understand कि ये किसकी entry है, then also it becomes a challenge. So to my mind, these are more power which are given to the assessing officer. How they will be used, how judicially they will be used, will be seen in times to come. The other amendment is again more of a housekeeping that if the updated return has been filed, then the period of assessment would be extended accordingly, and it would be 9 months from the end of the financial year in which such updated return has been filed.
So I have one question here. It's
Yes.
regarding the cryptocurrency.
Hmm.
So there are two questions here. In fact, there's another provision that has been included that is related to 56.210. That is the gifting provision. So what is your take on this gifting provision? I wanted to understand how is this going to be taxable? What are the implications behind it? Comment on that.
Absolutely, and it's a very interesting aspect. Glad you reminded me. There's one aspect which is bothering me also in that 56. So, if I gift anyone a cryptocurrency, and if it is falling under that 56.2, then yes, it would be taxable. Now, the question comes on the valuation.
Yes, sir.
How would I determine the valuation there? I think they need to come out with some rules on that also. The way Rule 11 UA is there for other assets. I think because that valuation would remain an issue as of now.
Yes, sir. Because there's this another provision. For example, if it's not properly valued, in that case it will be the other provision where it is it's
Yeah,
doubly
if it is
charged.
undervalued, that is what I'm saying. The question of
Yeah,
valuation, how would anyone
yeah,
know whether it is undervalued or not?
yeah.
There has to be certain mechanism to first ascertain what is the valuation of that asset.
Also, so there's another question that I wanted to discuss. I think this is something that was discussed in the news channels yesterday, regarding. So they have not really specified that it is a cryptocurrency, and they've given it a punitive tax rate of 30%. So now that they've spoken about RBI introducing another set of cryptocurrencies, do you think that that 30% will fall, that 30% tax rate will fall into that as well? Because considering that they have given a very punitive rate, that means they're basically discouraging these transactions. All right, at one place they're discouraging these transactions, and at one place they're introducing RBI based virtual currencies also. So I wanted to understand what is your take on this part, whether these virtual currencies introduced by RBI will also be chargeable at 30% or not, or what is your take on this part?
So two things. First of all, we need to have clarity on that whether cryptocurrency is a currency in the first place.
Yeah, of course.
So I think it would be unfair to treat it what the digital currency which is going to be launched by RBI and in what form and shape and how it would work. That's yet to be tested. Coming back to crypto, and I'll not call it currency. So coming back to crypto, it has been equated more like a speculative transaction
Yes.
because the way it is happening, I am buying it at an X rate, and after 3 months, it goes on to Y rate. So, what department is saying, what government is saying, that Y minus X, pay me 30% tax. Because you see, in any speculative transaction, so it's not punitive tax rate, that sense. It's
Yeah.
the maximum marginal rate, probably you can say so. But obviously, you look at any speculative transaction, government has always been discouraging all such transactions. If
But
you
sir, here
recall,
I have a question here. Say, for
yeah,
example, the things that, so for example, trading. So
yeah,
intra trading is not really charged at 30%. They have for sure they have restrictive provisions, like you need to prepare a proper separate speculative transaction PGBP and everything, but that is still chargeable at normal tax slabs that is there, but specifically charging this at 30%. I mean, I'm not able to understand which is better,
no,
because
no, I follow what you're saying. See, initially when these things came, if you recall the earlier days of future and option or even day trading, so the law was that if you have done a transaction without taking physical delivery, then they were treated as speculative transaction and they were taxed differently. Over a period of time, as the share markets matured and as these instruments became more acceptable, more tradable, then the definition was amended. Crypto is something which is a monster, no one knows what it is. World over, it is a struggle by every government. See, and we may be digressing from the issue, but the primary concern of government is that can it be used or is it being used for hawala purposes? Can it be misused for what we say terror funding? Now, blockchain technology is there, you can trace it, but by the time you trace it, money would have gone and the event would have happened. So, for it may be relevant for investigation, but you can't really stop the any undesirable event. So, all I'm trying to say is that what crypto is and the way it is evolving, it is yet to be completely deciphered. But in till the time it is deciphered, let the government not lose revenue on that.
Yes, of course.
So that's the limited aspect. So in that sense, I don't see it as a usurious or a punitive tax rate. But
Okay.
certainly, yes, it is something which is discouraged. And even Prime Minister came on national TV and advised youngsters that not to go for such instruments.
Yes, sir. Okay. Thank you so much. Okay.
Okay, moving on to the other major amendment. There has been a very subtle amendment in the faceless assessment scheme. Now, you might have seen the barrage of writ petitions which were filed last year in cases where the orders were passed under the faceless scheme. Most of the writ petitions were allowed that on purely on the ground that there was a procedure prescribed under 144B and that procedure was not adhered to. And why they were allowed? Because subsection 9 clearly stipulated that if any order has been passed where the above mentioned steps have not been followed, then such an order would be non-est, as in it never exists. So obviously for courts it was very easy to first find out whether the procedure was followed or not, and if the procedure is not followed, nothing doing, subsection 9 triggers and your assessment order goes for a toss. So now they have amended. Now they have removed that subsection 9.
That means a lot of petitions won't be accepted now, just on the
Henceforth,
basis of that.
henceforth.
Henceforth,
But
yeah.
although one issue continues to remain there, that whether principle of natural justice, it still need to be followed, and in case one is able to demonstrate that principle of natural justice was not followed, I think the writ would still be maintainable in those cases.
Okay.
So, regardless of the omission of subsection 9, that's my view on the omission of 144.
Okay.
Okay. Uh, Moving on to some TDS provisions. 194 IA, that is, if you buy a property, you ought to deduct 1% TDS. So far, it was that whatever consideration you are paying, you deduct 1% thereof. Now they have clarified that, not clarified, in fact, expanded the scope that you deduct tax on the stamp duty value or the actual consideration, whichever is higher.
Whichever I.
So, because basically bringing it par with the 43 CA and 50 C, um, 50 C, 50, whatever.
TC, yes.
Yeah, yeah. Now, last year there was this new provision, section 206 AB and 206 double CA.
Yes.
They provided that if you have not filed your return and if I'm making you certain payments after TDS, then I need to deduct tax at a higher rate unless you come and show me that I have been filing my returns. So the issue was that I would ask you that what is your status in the preceding 2 years. Now that has been reduced to 1 year, and a utility has been given to me. I need not ask you. I can go and put your PAN number and check whether you qualify as a specified person. That is the person who has not filed his return. If yes, then automatically I need to apply a higher rate of TDS. If no, then I go by the normal rate of TDS. So that has been amended. Another amendment is again on 194R, which is a TDS provision, but qua the benefit given to me which are taxable under section 28(4). 28(4) says any benefit accruing to anyone as a business income, and there was earlier no TDS provision. So, for example, I render you certain services, and in lieu of my fee, you give me gift vouchers of Fab India. Now, obviously, you are giving me gift vouchers. It's a benefit to me, taxable under section 28(4), but you are not withholding any tax thereon. So now there is this specific provision that if you are making any such payment which is taxable under in my hands, then you ought to deduct tax thereon.
So how will we identify this? Say, for example, in this case itself, if I give you a voucher or something, how will the government define and determine कि हाँ tax कटना चाहिए था और कटा नहीं है? How is that
तो
even possible?
कटना दो चीजें होंगी. कटना चाहिए था is 28(4). Whether
Exactly.
that
Cutting.
whether that qualifies as a benefit or perquisite within the meaning of 28(4) or not. Once that is sorted, फिर तो टैक्स काटना ही है. और नहीं काटा तो वो अगर मैंने अपनी बुक्स में रिकॉग्नाइज कर लिया that
हाँ जी.
I received these gift vouchers from you and I showed it as receipt of my fees. So government knows that this man has received income on which no tax has been deducted. They'll ask me किसने दिए? I'll say साक्षी ने दिए. So they'll come after you.
So, but ये बहुत ही मतलब काफी ग्रेव प्रोविजन है क्योंकि यहाँ अगर दूसरे बंदे ने भी नहीं दिखाया तो टेक्निकली तो फिर ये तो आई थिंक इवेजन ऑफ टैक्स हो गया टेक्निकली अगर देखा
देखो
जाए तो.
सिंपल भाषा में बोलते हैं ताले सिर्फ शरीफों के लिए होते हैं.
जी सर.
अब जिसने टैक्स नहीं देना वो तो वैसे ही नहीं दे रहा. ये
जी
तो
सर.
सब प्रोविजन चलते घोड़े को चाबुक मारने वाले होते हैं. जिसने पैन नंबर ले रखा है वही बेचारा फंसता है. जिसने पैन नंबर नहीं लिया वो मजे की जिंदगी जीता है.
जी सर. डेफिनेटली.
That was on a lighter note, but yes. Now there are a few other procedural amendments which are, for example, section 170 subsection 2A. तो अभी तक क्या हो रहा था कि अगर कोई मर्जर और डीमर्जर हो रहा था तो हम स्कीम में लिखवा देते थे दैट allow me to file a revised return.
जी सर.
Because there was no other provision in the Income Tax Act to whereby I could file a revised return of my merged entity or demerged entity. So now that has been codified.
Okay.
So after 75 years or so, finally this one minor issue has been addressed.
We can quickly run into the GST provisions also if you want to cover some basic ones.
Yes. So I'm just quickly glancing through the income tax provisions, some of the income tax provisions. Okay, there's one important income tax provision, I think, which in my also experience, I have seen that many people are missing on it. Slump sale. The
जी.
definition of slump sale basically was that it was sale of an undertaking. And then many judgments came that if it is not a sale, because sale normally derives its meaning from Sale of Goods Act. So now they have clarified all those overruling all those Bharat Bijli etc. other judgments that they've simply tinkered one word. So the word sale has been replaced with transfer. So whereby now whatever form, shape, and color you transfer an undertaking, it would, if it is an undertaking, then yes, it would be a slump sale. So that's very one minor amendment, but have a major ramification. I think
तो
that's one
बेसिकली
aspect.
अब ये 247 में फॉल करेगा आप ये कह रहे हो
242 7 247 नहीं
247 में
242A है शायद स्लम सेल.
नहीं स्लम सेल के अंडर में ही फॉल करेगा
और
या
स्लम सेल
240.
ही है. स्लम सेल का मीनिंग बदला है बस.
ओके
I'm
क्योंकि
just
247 ट्रांसफर ऑफ असेट्स का डेफिनेशन है
247
तो
तो ट्रांसफर है, वो तो अलग ही है. अब वही मैं कह रहा हूँ स्लम सेल तो 242A में शायद से डिफाइंड है.
अच्छा ठीक है मतलब 242 में ही है बस वर्ड चेंज कर
हाँ
दिया.
जी, उसका सिर्फ जो एक एम्बिग्विटी थी कि सिर्फ सेल कवर होगा, अब वो सेल की जगह ट्रांसफर कर दिया, तो
ट्रांसफर
अब
कर
किसी भी रूप में ट्रांसफर होगा तो वो कवर हो जाएगा.
दिया. ओके.
एक और जो प्रैक्टिकल डिफिकल्टी आती थी स्पेशली मल्टीनेशनल्स को, that whenever they were making payments and there were many contracts which are net of tax, that is the tax was being borne by the payer himself, and if at any point of time that contract got cancelled, now since the payment was not made, therefore but TDS has already been deposited, so there was no mechanism to claim refund of that TDS. So now there is a provision specifically has been provided for 239A. So that's a new section which has been brought on.
Okay.
One small amendment, and after that I'll conclude on income tax, is the amendment of section 263. Now, if an order has been passed by transfer pricing officer, that would also be a subject matter of revision for the TP for the CAT. Lastly, in fact, I would want to take this is that CIT appeal has been empowered to impose penalty on cases of search or section 68, etc. I think this is something which should be raised about. A voice must be raised about it, because in my mind that dilutes the appellate power, because an appellate body ought to be unbiased. If he is given power to levy penalties, somewhere it may cause prejudice. So I think, in my view, government should relook at this power, whether CIT appeal should be given that power or not. So with this, I'll quickly conclude on this income tax. GST, there are again more of a simple amendments. Two amendments have been made. One is on account of the credit. Earlier, the credit was allowed for 3 months, so I think that has been extended to 6 months.
6 months, yes.
There's one major amendment again which sort of reduces the dispute in customs. The earlier the orders were being passed by certain officers which were not designated as proper officers,
Okay.
and such duty demands were being quashed by courts and tribunals. So now they have clarified that, and that amendment has been made, and now so those orders would sustain. Uh, Barring that, nothing major. More of procedural amendments on GST. Uh,
I think mostly procedural amendments
yeah,
only
those are
regarding.
rest of them are
Yes,
mostly procedural, so no substantive. Because in any case, now under GST, whatever has to happen through GST
yeah.
Council.
GST council meetings, yeah.
So we were hoping that probably there would be some dilution of prosecution provisions under GST, but government doesn't seem to be in mood of relaxing those provisions. So with this, I conclude my presentation on
Thank you so
income
much, sir.
tax.
Thank you so much for this informative session. It was great having you.
Thank you,
And
Sakshi.
I hope we can, take another session super soon regarding income tax for
Sure.
sure. Thank you
Sure.
so much. Okay.
Thank
Bye
you.
bye.
Thank you.